Welcome, everybody. Thanks for being here this morning for our facilities funding webinar. I'm Gideon Tolman. I'm the financial officer at the State Department of Education, and I want to introduce the folks who are in the room with us today. We have Julie Oberly, our school finance director. We have Eric Herringer, who's with Piper Sandler and is also the financial advisor to the State Building Authority. Wayne Muleman, director of the State Building Authority, executive director. We have Monty Wolstenhume, who's with Idaho Digital Learning. And then we have Spencer Barzy, who is the department regional director. And also, you might not be able to see her, she might be off camera, is Amber Worthington, who's part of our school finance team, and she's going to help monitor the chat and admit people as they come into the meeting. Right before this meeting, we had our regular monthly school business managers webinar. And this next portion, our school facilities webinar, will apply to districts. So if you're with a charter school, you are welcome to listen, but this won't be as pertinent to you. In our first webinar, our first facilities webinar, we received some general information about permitting processes, requests for qualifications, and requests for proposals, architectural considerations, construction considerations, and all regarding capital projects. And then in our second webinar, which we had last month in May, we received some more specifics around building maintenance and construction. And today, we're going to talk about bonding and some of the specifics around timelines and requirements for the facilities funding. So today we're going to first hear from Monty Wolstenhume, who I said earlier is the Director of District Programs at Idaho Digital Learning, and he's going to share some lessons learned from his experience with bonding in the Teton School District. And we'll then move into a discussion about the bonding process and the timelines and requirements associated with school facilities funding. That portion will be a collaborative effort with Wayne Muleman, Eric Herringer, Spencer Barzy, Julie Oberly, and me. And this webinar will be recorded and posted on the Department of Education website so you can refer back to it. And for folks who aren't able to be here today, they can go back and watch it later. The other webinars and related documents are posted on our Department of Education. They're under the school finance webpage, and there's a new facilities section on that webpage. Please feel free to ask questions as we go along. Amber Worthington on our school finance team is going to monitor the chat, and we'll try to address questions as they come up. Spencer's also going to be answering some questions in the chat as they come up, and I think that might be it. Any other introductory remarks anybody thinks we're missing? Okay, Monty, we'll turn it over to you.
Thank you, Gideon, and I appreciate the opportunity to share a little bit about my experience, and you can review the first slide. That is not AI generated. If you need to throw a little humble humor at yourself or others, that's found at despair.com. And that's how I have felt for sometimes in my career in service in school districts. So yeah, hi. I'm going to share with you
I put an order in last night.
Our experience of hitting an iceberg and paying the price for that. So in my 16 years as superintendent, and the majority of that time was at Teton, and I was privileged to be in a community where the support for a $37 million bond happened, and with that, we built 2 new elementary schools in addition to 4 other schools. So for a good portion of the construction cycle, we had 6 concurrent projects running at the same time. As that payment process was starting in December of 28, you'll see a link to the fraud summary. We experienced a fraud email phishing scam where $784,000 was sent to the wrong account. I just want to pause for a second and mention that yesterday the city of Gooding sent out a press release. They experienced the loss of over $1 million from an almost identical experience that we went through at Teton. So the fraud summary is 4 pages of our experience, and I will just share a few highlights, and I really feel for the city of Gooding or anyone that has gone through that unfortunate experience. The reality is fraud schemes work, and that's why they are sophisticated and relentless. There are a few key points in the fraud summary. Is the financial system we had in place was agreed to by all the parties, meaning the financial institution, the contractors, the architects that were reviewing them. However, the sophisticated fraud imitated the contractor that the payments were going to. It was only through a careful review the next day that it was caught internally, and we immediately reported it to local law enforcement and the FBI. And I can't say enough about the professionalism and the tenacity that the FBI put into their investigation. And that is a humbling experience to participate with the FBI. And from their efforts, they were able to recover $484,000 of the funds that were thankfully still in an account in the U.S. They were very clear with us, had those funds left the U.S., they would never be recovered. And at that time, our insurance covered the other loss. However, I know there's been significant changes in deductibles and coverages due to the extreme amount of loss that has been happening. In our review also, we were one of the only school districts in the entire country that year to recover any of the funds that were lost to a fraud scheme. And there were larger districts in other places around the country that had lost multi-million-dollar amounts due to fraud. So we implemented a double-check system on everything we were doing moving forward. Every communication, every payment, every deposit, and double and triple checking every step was going to be insured. And not insured by an insurance company, insured by accountability of people and their behavior. There was a forensic audit that was conducted on our digital systems, and we were not hacked. This was 100% human error, and one phone call and 10, 15 seconds of a phone call would have saved someone's employment, would have saved not just the funds, but the bigger loss for us was community trust. And we all serve our communities, and you do everything you can to build community trust, and one click and one mistake, and that can quickly erode. So hopefully you'll take some time to look through the fraud summary. You'll see my contact information listed at the end of the slides. And then if you could go to the next one, please, Gideon. You know, the key points and takeaways are you have to ensure security. You have to be suspicious of anyone that's outside of the party that sits down at the table and says, here are the funds, here's who will process them, here's who will receive them, and here is who is double checking on each step of that process. The communication, you have to be very cautious of anything that's digital, and this was pre-AI, so people with time and resources will get even better at creating a fraudulent email or an invoice or a payment that you believe is accurate. Whatever you agree to with those 3 or 4 key people, there should be no deviation ever for any reason. And that deviation creates a crack in the door for fraudsters to come in and take advantage of whoever or whatever is in place. Ours happened in December, so if you think about how fun the school year is, and we're both celebrating and going 100 miles an hour personally and professionally in December. It's a short month. There's a million school activities. You're trying to finish accounts payable. You're trying to process your payroll, and now you have bond payments on top of that. And there's pressure and there's stress, and that is the prime time that mistakes can happen. You should ensure that funds are protected to strengthen your community trust. That's the goal of everything that we're doing. And our transparency in making every decision in board meeting and our transparency in posting all of our financials on our website create an opportunity for people that want to find out how much money do you have, who is your contractor, what projects are you working on. So your strength is also your weakness, and you, each of you that will get money will be a bigger target than you were before you get the money. And that's especially the case for anyone that passes a bond locally. Congratulations to Salmon. I know you're celebrating, and that's amazing. You should have 5 layers of suspicion on everything you do. So that's my experience, and I'm here to help and share however I can. If anyone wants to reach out to me at any time, I'm here to help however I can.
Thank you, Monty. Are there any questions that came in for Monty? Okay. Thank you so much, Monty. Okay, let's move on to the $1 billion that we're bonding for. And I mentioned earlier that we have Wayne Muleman and Eric Herringer in the room, and the Idaho State Building Authority is the agent that is going to be responsible for the bonding for this $1 billion. And Wayne and Eric have been wonderful to guide us and advise us as we move forward. The information that we're going to share is what we know at this moment. We're continuing just about every day to continue to piece things together and make sure we have the best information for you all possible. So we want to talk a little bit about the bonds themselves. The goal and the intent was to do tax-exempt bonds, which allows the state to fully to have the most bang for the buck on the $1 billion. Tax-exempt bonds have significantly lower interest rates, like you can see here on this slide, and they will allow more net proceeds to go to you all from that $1 billion. Federal law is what governs the allowable expenditures, and we talked a little bit about this in the previous meeting in our monthly business managers webinar, that with tax-exempt bonds, those are restricted to capital projects, and we'll talk a little bit more about that. We've had a lot of conversations with you all about could some funding be used for maintenance staff salaries and for some of the maybe smaller projects that you all undertake regularly. And for these tax-exempt bonds for the $1 billion, that is not allowable. And as a reminder, there are a couple of different options with the Modernization Facilities Fund. One is you can request to take it in a lump sum, and the tax-exempt bonds would apply to that. So we'll talk a little bit more about this, but we're going to ask you all in a survey following this meeting, if you are planning on doing the lump sum or an annual distribution, and if you're planning on a lump sum, when you could start using that lump sum, because that information will determine when and how much Wayne and Eric and their team can bond for. And we'll talk about kind of the different increments and timelines in just a minute with that. When we were doing the post-legislative tour that many of you participated in, we thought at the time that there was room in the law, that our interpretation of the law might allow for a portion of the $1 billion to be available to you all at the end of August. And our understanding at this point is that will only be the case if you are taking an annual installment versus a lump sum for the bonds. And like I said, we'll talk through the timeline a little bit more of with the bonds here in just a bit, but we know in the legislation it talks about routine maintenance, but that is really for bigger projects on your existing buildings. And again, we'll cover that in just a minute. So this is just kind of an overview, but we'll get into the details in just a bit. So let's go ahead and let's move forward to this part, Spencer, and then we'll circle back to some of the bond specific items.
So this House Bill 521, as you know, is rather lengthy and has various requirements for school districts to qualify for the funds. But for simplicity purposes, we've broken them down to about 11 areas that we'll discuss today. And so the first one, the statute requires that districts outline resources and steps necessary for school districts to be refurbished into good condition. So to help with that process, we've had Jacobs Project Management Company, which has a strong presence in Idaho. They're going to help us with facility condition assessments. And we will train district employees here in 2 weeks how to conduct facility condition assessments. But the great thing about when they are finished, the results will provide an estimated dollar amount of what it takes to get your buildings back into that good condition. And so there's 42 data entry points that your district employees will conduct those and enter those into the software in what we call maps. And then it will give you an estimation there in 11 areas. So it's a pretty simple process, actually. The training will last about an hour, but that's the first step. So number 2 is your 10-year plan. This is another part of the heavy lift that the statute requires, is that you're asked to develop a 10-year plan that outlines anticipated construction, renovation, and maintenance needs. And so here on the screen is a screenshot of what the 10-year plan and we'll have a link that we've sent out previously, but we'll also send it out at the end of the webinar today. But you can see the areas there that this is the template of the 10-year plan, but it's also the same organization that the software from Jacobs called MAPS will provide the estimation for you. And so we're asking you to break it down by campus. So if you've got 6 buildings at your middle school campus, you would combine all of those anticipated revenue or expenditures over the next 10 years by area onto this sheet. So it's a pretty, the spreadsheet is to be compiled after all of your hard work is done. So just a couple things that we shouldn't confuse with steps 1 and 2. So you can use your own 10-year plan template. There's nothing sacred about the template the department has put together, so long as you have your major building systems and also a 10-year plan. You don't have to use the template that the district has provided. And the estimations from the software, remember, they're different than the 10-year plan. Those estimations that you're going to see should be used as a guidance for you as you develop your 10-year plan and begin to plan all of your possible expenditures. But we're also very aware that the estimations that the software is going to give you are going to be more than your allocation. So that's where the planning process comes in, is you're going to look at those estimations of the major systems of your facilities, and then you'll put together your actual 10-year plan. And we've also gotten the question, well, what happens if all of our modernization funds are going to be allocated towards new construction or property acquisition? You still need to conduct your facility condition assessments and also your 10-year plan. Those are all necessary.
Want to keep going, or do you want to pause a sec for some questions?
Let's take some questions.
Okay. So one question, what if we already have systems established with other companies? For example, NAMPA paid a lot of money the last few years to do this.
Yeah, it's a great question. A number of districts have had reputable folks conduct those facility condition assessments. So essentially, you're going to take the results of those, you're going to update them, you're going to re-enter those back into the software. Jacobs estimate that'll take you about 30 minutes per facility. If you already know the answers to the test, you're just going to re-enter those in. And we've gotten the question of why are you requiring us to do it again? Partially, the software will help generate us a dollar amount, but we want the same source generating the dollar amount statewide. It just gives us one source, and it's not that other sources aren't reliable, but we just want the same software, same source for the estimations. It just helps provide validity to all of us. The software was also decided to be used to help districts, save districts lots of time, right? To go out and get bids and to make those estimations reliable. It would take a lot of work on your behalf. The software helps get us around that point and will save districts time. Obviously, they're not bids, they are estimations that we can use for rough budget numbers, but it's a great start, a great insight for you as you and your board and administrators begin to create your 10-year plans or update your 10-year plan.
And then one other question, can you distribute the spreadsheet to those of us in the meeting? Meeting invite was forwarded to us by our principals who aren't all on here.
Yeah, we'll distribute it. We'll distribute it for sure after the meeting in an email. We have a number of great resources we'll be sending out here shortly.
There's a couple more.
Okay, a few questions. Is there any thought to selling the bonds as taxable or a portion of taxable to allow for more flexibility in the uses, or does that flexibility not exist? I'll start with that one, and feel free to chime in, Wayne or Spencer or anybody else. It was made clear to us by the governor that tax exempt is the way we need to go. We did explore that option of doing taxable, doing a combination of taxable and tax exempt. And we went back and forth on a lot of different options, and the final word was given by the governor that it is to be all tax exempt to maximize the proceeds from the bond. Anything?
You know, I might add to that. From the outset of the involvement of the building authority as a possible way to leverage the sales tax annually into a lump sum for schools to meet their major needs, it was clear to us that the expectation of the use of financing would be tax exempt in order to produce the largest net fund available for distribution to schools. And it also was explained that that fits with the notion of school facility modernization. This whole plan set forth by the legislature was about modernization of school facilities and not ordinary maintenance kinds of activities. There has been a long backlog of real major construction needs of school facilities around the state. And there also has been a history of questioning the legislature's inability or inactivity in helping local districts fund schools. There have even been court cases, as most of you are aware. So our charge is to utilize the benefits of tax-exempt financing and maximize the total amount of money available. So it does take away some flexibility of schools, but I think that meets the primary objective of school modernization.
Thank you, Wayne. And we know that there's still a need on the district side to have some funding for maintenance with the lottery funding and the maintenance match funding and bond levy equalization funding being rolled into the school district facilities fund. That ties it up a little bit more than you all have been able to use it in the past. And so that's something that we can keep talking about as we move forward and potentially address in the next legislative session. But the tax exempt for this $1 billion is the way we're gonna go. Okay, next one. Cash flow concerns aside, can we incur costs now that we could apply against our House Bill 521 funding if the project is an eligible project, and then apply that funding when it is received? I would say yes, because just like other distributions you all receive, I think that's how you do it with a lot of your other payments. So we have asked that question with the different folks we've been working for, and that was the response we received back on that. If we are getting a separate FCA, or if we have previously had an FCA done recently, can we submit that information to you, to the department, or are we required to use the software you have provided? If we need to use the software, can our FBA vendor be provided access to utilize this software?
Yeah, that's up to you as a district to provide, and we can provide more usernames and logins to the map, to the facility condition assessment software as needed, but they can certainly enter that data for you. That's totally a local decision. So, great question. And like we said previously, if you know the answers to the test, it's simply a data entry. It won't take you that much time. It's a pretty simple and straightforward process. The process and the software is very user-friendly.
Next question. I understand now that the bonding rules are what is restricting us from doing routine maintenance. Many districts have licensed electricians, plumbers, HVAC, and general contractors in employment. It is frustrating that it is allowable to contract a third party to come in and replace a broken furnace, but it isn't allowable to pay the wage of the person on staff to replace the same furnace.
I would say we don't know we're working on the answer to that question. So in summary, the question is, if we have our own licensed contractors that are district employees, can they be utilized to construct capital projects? Can their salary be paid as district employees? We'll get back to you on that. We're still working through that question. It's a great one and a very valid question.
Next question. This is for student-occupied buildings only. So the information that we sent out to you all, the survey to get back your square footage on student-occupied buildings, that is what will be input into the facilities condition assessment software. But as far as uses of the school modernization funds, you could use those for other buildings that are not only student-occupied buildings. Is it necessary to have a third party conduct a formal facilities condition assessment, or can we do that internally using some of the information assessments and price bids we have received from third party preliminary site assessments? Okay, perfect, you got that one. Okay. What is the definition? We're going to get back to that. The definition of routine maintenance we're going to cover in just a minute. And then as far as lottery funding being used for routine maintenance, right, and we'll talk a little bit more about that too. Okay. Okay, and then another question, we are submitting 2 separate reports. The first report is using the software to get a dollar amount for what it would cost to get our facilities up to good. For Lake Pend Oreille School District, $150 million. Then we submit a 10-year plan on what we think we will spend over the next 10 years on capital projects based on actual estimated revenues. For many, the only revenues may be 521 funds and discretionary dollars.
Yeah, so the software, when you're pushed done and submit with the software, it has all the information in there for facility condition assessments. As for the other documents, like the signature page that we'll talk about in just a minute, and then the 10-year plan, those will be actual documents that you will upload into the portal of MAPS, the FCA software. So yes, they are separate reports. Both in the end will be in the software.
Okay, and then lottery funding is gone, yes, and what we know now is no, this cannot be used for routine maintenance, and we'll cover that just a little bit more in just a bit, unless it's annual. If you elect the annual payment, then you could use it for routine maintenance once it's gone through that order of uses of paying down existing debt, but if it's a lump sum, it can't be used for routine maintenance, and we'll talk about that a little bit more. Okay, let's move on, and then I think we'll answer some of these questions as we keep going.
Okay, so number 3, school districts attest to compliance with the dignity and non-discrimination in public education requirements. So these next 6 or 7 items we're going to talk about, they're like a signature page. They're yes or no questions, essentially, that you will, the district superintendent and board administrator will ink, not stamp their signatures on it. You'll date it, and then you'll also upload it into the software, just like you have your 10-year plan. But the requirements on that are number 3 that we just went through. The school district attested it doesn't require job applicants to sign written diversity statements, yes or no. Correct answer to, 3 and 4 are yes. Number 5 is that conversation about meeting the instructional hours or the minimum instructional days set by the State Board of Education, which school districts currently do. So, the correct answer to that will also be yes. Right. So the school modernization funds, number 6, will be utilized in a manner that aligns the school district's core educational mission and complies with allowable expenditures from the statute. Obviously, the correct answer to that is number 6. And then number 7, our school district is requesting to receive the funds either in the lump sum or annually, or the combination of a lump sum or the annual payments. And then number 8, which date of the school board approve the planned expenditures? So essentially, the 10-year plan needs to be approved by your school board. They're obviously, with that kind of money coming into your district, we want your school boards to be involved in that process. So you're just going to tell us the date that the school board had actually was approved at which meeting. Do you want to answer the question?
Yeah.
That annualized and lump sum.
Yes, and I think we might be covering this in a little bit too, but yes, you can elect for an annualized payment and then switch to lump sum, and we'll talk a little bit about that timeline in just a bit.
Great. So narrative. So this is a piece that's going to be inside the software. There's a couple narrative questions for you. So the statute asks that you describe your population trends and how that has impacted district planning. So remember, brevity is best. We don't need lengthy narratives here. Describe how population trends. If your population trend really isn't changing, you would say something like, our population is anticipated in the next 5 years to be within 1% and 2%. No major considerations necessary by school board and administration. Or it's increasing 7% in the next 5 years according to our projections. We need to build X amount of facilities, we need to bond, et cetera, or it's declining, reduction in staff, et cetera. Briefly discuss the changing, this number 11, the changing preferences in the school district's education delivery that may have impacted education planning. So this is up for your interpretation. It isn't necessarily referring to that it has to be school facility related, but it might be. It might be that you're having an increase of technology per se in your district, or more open space for classrooms, or individualized learning, whatever that might be. But again, it doesn't need to be lengthy. That's really up for your interpretation of how the delivery education methods may be changing in your local school district. And then number 11, you're really going to summarize construction costs over the next few years. That actually should say 5 years and not 10. I apologize for that. And so you're going to talk about estimated cost that you're estimating, your time frame, square footage, et cetera. And if you have a document that already outlines this and it's current, you're welcome just to upload that into the system and say, see attachment for this question. So we're not asking you to recreate the wheel here.
Okay. Let's see, let's take a few questions. So capital projects, 7-year rule was previously discussed. How is that figured? Because would something like refinishing gym floors count if it's done yearly but will extend the life of the floor by more than 7 years? Go ahead, Wayne.
Well, with everybody involved, everybody has an ingenious mind about this. I think the answer to this is going to be that as this project is developed, or program is developed, the department will be able to give more specific guidance as to particular things. But the annual refinishing of a gym floor sounds to me like maintenance. The gym floor, placing the gym floor itself, has a long, useful life. But its life is dependent upon annual proper maintenance. And so we are going to always encounter some areas that are gray, but I think refinishing the gym floor sounds like maintenance to me.
Thanks, Wayne. Next question, is there a specific board date that the approval needs to happen?
Completely up to you. The process does have to be finished by June 30th, 2025. Statute requires you to be able to elect annual lump sum by then. So we're essentially gonna ask you to be done in a year.
And then, the next comment is about lost lottery funding and lost, maintenance funding and the impact that has. And yes, we're aware of that, and we'll keep working on that. But, those are good points about the lost funding and how, your maintenance funding is now tied up in the school district facilities, order of operations too. I don't know if this is helpful or not, but I think well, you all know, the intent of the School District Facilities Fund is to reduce local tax burden. And once that's taken care of, then you can use the School District Facilities Funds for routine maintenance. But I know for many, maybe most of you, that there is existing debt to pay down first before that's used for routine maintenance. But yes, we will keep working on it and keep talking about that. Another question, will we receive any distribution of funds prior to the 10-year plan being board approved? No. So the plan will need to be approved and submitted before we can distribute any funding. And then let's go to this next slide, because the next question deals with that. So this talks about the lump sum distributions, and the first bullet is that school districts must choose between annual and or lump sum distributions by June 30th, 2025. And that is not a typo. So June 30th of next year, the legislation provides that time for you all to plan and decide if need be. I know a lot of you are already ready to go and know what you want to do, but if you're not, then you have until June 30th to make that designation, whether you're going to do the annual or lump sum, or a combination of annual and lump sum. So with the lump sum distributions, those are going to be pooled together. So we have $1 billion that's going to be bonded for, but if we put $1 billion out on the market all at once, that's not the wisest way to do it. So the goal would be to pool together chunks of money in 3 or 4 different increments to have the best success on the market. And Wayne, or Eric, if you want to add anything to that, I'd love that.
Thank you. Yeah, I think the objective for the building authority is to issue bonds in amounts that make sense in terms of going into the bond market and optimizing the interest rate, tax-exempt interest rates that are available, but also to time it for school districts that can be ready for their money, but that will likely be different districts have different timing. And so in anticipation of some districts that are ready, with projects ready to go and can use the money right away, we will plan a bond issue fairly soon that can group those districts together and get those proceeds available to them. For school districts that are a little later in deciding what to do, we'll plan then successive bond issues that might accommodate those who come later. But I can tell you this, the decision to either use annual distributions or lump sum affects the amount of money the building authority can produce. For those schools who choose annual distributions, those monies will be removed from the calculation of what can be available for bond issues. And so the more schools choosing annual appropriations has the effect of reducing the overall amount that we can provide lump sum funding to the building authority. So I think in any event, it's in the interest of school districts to make your decisions as soon as you can. Doing so will help us optimize the amount of money we can make available through the entire program.
Thank you, Wayne. And then, this next bullet point, after the department receives the completed applications, it'll take approximately 3 months to issue the bonds and then transfer those proceeds to the modernization fund. And once the proceeds are in the modernization fund, then we can distribute those to you all. Would you mind talking just briefly about, you know, the 3 months, kind of what that looks like, you
Well,
guys, and
maybe
why that is?
Yeah, Eric, maybe you can chime in on this.
So maybe I'm not totally following the money that gets into the modernization fund and what happens after.
Sorry, between when we say we're going to bond for this money and when we actually get the proceeds from the bond, we thought maybe
Oh,
that'd
sure,
be 90 days or so.
Yeah, for the building authority is, you know, underway right now, is working on the documentation. So there's a certain amount of legal documentation to, you know, outline the security structure of this bond issue. We've asked for documents to be produced, by the end of this month. Once we get those together, we'll start to talk to the rating agencies to get the bonds rated. It's a pretty typical bond process. We're gonna need to hire an underwriter. The underwriter is gonna be the one that goes out and markets the bonds and secures investors, ultimately. And so all of those things are, you know, Wayne and I have been working on, and we have underway. It'll take about 3 to 4 months to go from here to there to have a bond issue ready to sell and close. At some point along the way, we need to know how much to sell. And I think that, you know, the point Wayne was making is, you know, the first tranche will try to match up with how, you know, what the demand is. And I know Spencer, I think, or one of you is gonna talk about the timing of when we wanna know kind of when districts expect to be ready. The sooner we can have a little bit of that information, even if it's not final, will help us sequence that out. But yeah, I mean, overall, we feel comfortable that we can be ready to sell bonds by, you know, sometime September, October, and I've started that process. Just, you know, how much is gonna be, we probably need to know by, you know, middle of September.
And sequentially, as other school districts come on later, we're gonna be kind of pooling the same effect and to accumulate enough users to justify a bond issue, and then we'll be issuing bonds. And I think we can expect the timing of decisions about how many schools are pooled together and the ultimate production of funds will be shorter for the successive bond issues than the first one, because there's a lot of work just in the first one to get everybody familiar with what the program is. But again, I encourage school districts to make decisions as soon as you can.
So if we could just, before we get to that question, if we could just clarify, so the survey that we send out, it verifies and says, hey, districts worth $350 million roughly are planning on submit before the end of August. That then gives you ability to go out and to bond.
Well, that gives us the ability to plan for a bond issue, and that's just one element. But again, you're not gonna be able to issue the grants to schools until they really are qualified.
Oh, for sure. Yeah.
So we're not waiting till that process is completed before we start. We're going now and hopefully minimize the amount of time between the real qualification and the production of funds.
Great, that's great. Just to clarify, so Kathy Anderson's, the question there is June 30th, a typo. It's not. So that process has to be done essentially a year from now. Statute says July 1st. We're saying June 30th, 1 day sooner. That way, just so we can plan and make sure that we've got everybody in that needs to be, so we can stay in line with the statutes.
Well, and I understand the statute is if a school district does not make an election by that date, they lose their opportunity to participate entirely.
Yeah. So there's safety in that, what Wayne just mentioned. That's why we're saying you've got a year, and we feel like a year is reasonable for you to get the plan done, but it's also guarantees that you're gonna get your money. So Mark's question is a great one. So once existing bonds and levies are paid down, the money can be used for routine maintenance. Now that question is different in two parts if you're handling lump sum or annual distribution.
Right.
That's right.
Right, so if you elect an annual distribution, that funding is going to come from sales tax revenue. So that does not have the same restrictions as the amount that's going to be bonded. And so, once you've gone through those, school district facilities fund over order of uses, so paying your existing debt, and then you get to that, fourth point, which we'll cover in just a minute too, then yes, you could use that for routine maintenance.
So if we have a follow-up question on that, regarding choosing the annual and the lump sum, you obviously can't choose lump and then go to annual, because you got all your bacon to start with, right?
Mhm.
So you could start with annual if you wanted, and then transition to lump down the road.
And I will only add one caveat to that. You can't do that if you wait so long that we have maximized the lump sum distributions, already. And I don't think you can choose, to go back and forth. You can choose annual and then potentially elect to join a group in the lump sum or the balance. It does affect the amount you get on the lump sum. It will reduce the amount you otherwise would get if you elected early.
Good explanation.
So,
Could someone elect to say, I want half of my money lump sum and half of it in annual?
Yeah.
And make that
if
decision?
going
Yeah.
into the program,
At the start,
Yeah.
yeah.
Yeah, if you make that decision by June 30th of
That's right.
25, right?
And then, once you've made that decision, then we have a reliable number that we can define a bond issue with. But we can't unwrap the bond issue once the decision has been made in terms of switching back to annual.
Okay, should we do a few more questions before we move
Yeah.
on? Let's see, I'm just gonna read this one. For standalone public charter school districts with an EMO, are we treated the same as districts with multiple schools? We did not receive the most recent school safety grants, round 2, so we have a lot of capital projects already on our list. Also, is there a grant award letter stating how and when this money is received? Is it separated out from operating funds from the state, or all commingled together?
So, so 521 wasn't in relation to charter schools. Bill 766 was, the $400 was relative to public charter. So this conversation has no applicability to a public charter. It's a whole different conversation for House Bill 766.
Then the next one, when do you anticipate, and if we missed the point of that question, circle back with us and we can try again. When do you anticipate the first issuance of bonds?
We're presently planning for a bond issue in either late September or sometime in October to cover that first group of school districts that can get qualified and are ready to go and have defined uses of the funds. And then we'll follow that as the need follows.
But is that process accelerated if we have applications prior to then that's sufficient to get a bond out?
Well, we're gonna be as flexible as we can, but it's a chicken and the egg problem, I mean.
Good.
So we've gotta work together, and the best way to do that is for school districts to be able to, as early as possible, make decisions about the program.
I like the chicken and egg analogy. The good thing is we have chickens ready to lay here, so.
Well, no, and to follow up on that, I mean, I think that realistically, money in hand, closed, ready to go out, October
Yeah.
is a very reasonable timeframe,
Yeah.
but, you know, best laid plans.
Sure,
So,
sure, good explanation.
And then, the next question is, can we get an email or a check sheet with all the documents needed to receive the funds? And yes, we have that. That's actually built into the software that you'll all be using for your facilities condition assessments. It'll be part of the signature page that Spencer covered. So yes, there's a check sheet for that, and we can, email that out as well.
That's a good question. If our project is 1 to 3 years out, does that delay us in getting money? If your projects are 1 to 3 years out and you choose lump sum, it will not delay you getting money. You can get the money today for defined use of the money for capital improvements in 3 years out. And that gives you the money in an account. You're accountable for the ultimate use of the money, but for a 3-year project, that allows you some earnings off of that lump sum grant, by investing the money until you need it. And while the core grant, it has restrictions because they're tax-exempt bond issued grants, the earnings that you make on those funds don't have that restriction. So back to a question earlier about how can I have my maintenance staff help with building capital projects? You can use the invested earnings off those funds to pay your staff salaries. But there is a restriction on the use of the core grant money for that purpose. So it would have to be for the capital improvement itself.
And that's something that, I know we've talked back and forth with you all on is the interest. If you deposit that funding into an account, can the interest be used for other things? And what we know now is, yes, that could be used for other things.
So there was an earlier question, can you buy a new HVA system and have your staff install it? You can. I would suggest you use the interest on the fund to pay your staff and use the core grant funds to buy the furnace.
So that we're not running afoul of the regulations around tax-exempt bonds. With that. Okay, do you, Wayne or Eric, want to take that next one about the underwriter?
Competitive negotiated.
It's probably going to be negotiated because it's a unique program. It's kind of a different beast for everybody in terms of how funding is made available to schools, and so we're going to use a negotiated bond placement system.
And sorry, I should have read the question. That's regarding the underwriter for the bond process.
Selecting the underwriter, right?
Selecting an underwriter. Did I hear correctly? Let's see. Did I hear correctly that if we take the lump sum, we won't get any money prior to the start of this school year? Yes, that's what we were hopeful that maybe we could consider do an advance of the lump sum or something like that, but we have found out that we won't be able to do that, and I'm sorry about that, you guys, but that's correct, that the soonest we're looking at this point is late September, early October. Next one, if we're choosing the lump sum option, not expecting to see any funds for the first year, I assume that on our 10-year plan, we will estimate an expense of $0 for the first year.
And that's up to you. I mean, that's a local decision. I mean, and it's a great question, and I see what you're asking. You shouldn't think of that 10-year plan of only expenditures related to House Bill 521, or the School Modernization Fund, I should say. But you could. That's up to you of where you're going to spend funds by campus, by year. And so if you want to put 0 there, you certainly could. Certainly could.
The next one, with the earliest possibility being October for funds from bonds, will it be our entire lump sum, or as earlier stated, will it only be 10%? So if the amount of districts who are ready to go at that point, if it's only a certain number of districts, it could be the whole bond amount. If every single district is ready to go all at once, and we have to chunk them out into $330 million chunks, then we'd have to adjust those distributions proportionally.
And I might say this, we're kind of doing some of this in the dark. We have kind of set forth a plan of approximately 3 bond issues of approximately equal amount. It could be 2 bond issues if school districts get ready and have a use for it. It just didn't make sense from a bond marketing standpoint for us to go out with a single bond issue for approximately $1 billion in a program that is brand new to schools, brand new to the state, and a financing structure brand new to the building authority. So, we want an introduction into that bond market in a manner that creates interest and activity and receptibility, and then we can follow it with a bond issue that fits the needs of the schools. But in the absence of knowing what school districts really are gonna turn in, we just landed on a 3 bond issue plan.
And I think it's fair to say that if everyone's ready this fiscal year, the fiscal 25, we could have all of the bonds sold
In this year.
and closed in this fiscal year. But, you know, unlikely that if everyone's ready in October, that we're gonna be able to do 100% in October.
That's helpful, yeah.
So I think one clarification that we have is we asked about the 10%, which is a very valid question. But back to the point of, we don't wanna say, I mean, we feel like it can be at least 10%, right, as it comes in to the distribution to districts, but we don't know what that's gonna be, because we don't know when everybody's gonna apply. Like, it's hard for us to say it's gonna be 15 or 80%, because we don't know where it's gonna be until we've gathered the eggs and put them in the frying pan, essentially. So, tell us about, we don't wanna drop, say, 250 million back to back on the market though, right? We want some timing between there, or?
But that's gonna probably have little effect on the school districts. I mean, this is a 10-year plan for major capital improvements. Not every school district's gonna be spending all that money in the first 3 months of this program. Some of them are gonna be 3 years out. Some of these capital improvements may be 5 years out. So we're trying to make the money fit the expenditure need, and we don't know that yet. So I see there is a question about, do we need to worry about arbitrage? School districts don't have to worry about arbitrage. The building authority has to worry about arbitrage. And so that's one of the considerations we have to account for when we're structuring bond issues to make funds available for grants to schools.
And one other question is, can we pull down the funds? Let's see, are you saying we can't pull down the funds unless we actually have a project in mind? No, that's not what we're saying. You can pull down the funds, put them in an account, and then use them for whatever timeline you have at your district.
But I would say this, I mean, back to the fund, you have to have a capital plan that shows how the funds will be used for modernization of schools in making capital improvements. So this isn't a program that just creates bank accounts. It's a program that modernizes schools. And so you don't have to spend the money immediately when you get it, but you have to have a plan to spend it within this 10-year period, and you have to be able to account for the expenditures.
Thank you, Wayne. Interest can be used for any routine maintenance or just the salaries, supplies, materials on a big project.
The interest you earn while your funds are in your possession is not subject to the same restrictions as the core grant. So you have flexibility to use it, the earnings as you need it, but the core grant has to be used for capital improvements.
Thank you. Next one, it's a bit difficult to forecast building needs over the next decade. What if in 5 years there's a major change in the needs? Can the 10-year plan be adjusted?
For sure. I think we would dare say that after year or two, I think 100% of our plans will be modified. And so it's a great question. I think what the intent of the legislation is here, there's evidence that districts have had conversations about long-term planning. And that 10-year plan is evidence that that's happened, along with those narratives that we talked about earlier in regarding to anticipated construction in the next 5 years. So what we're after is to see that there's been planning in all of it, in the 10-year plan, in the narratives, all of that. We understand that they're gonna change, but we just want to see evidence that there's plan so that the intention of the legislation is being fulfilled. Great question.
answer. Let's see, next one, if our initial project changes or evolves into something else, do we have the latitude to change in the 10-year plan? Yes, I think that was covered. So the 10-year plan only has to be related to 521 funds.
Or the lump sum.
So your 10-year plan should be whatever you're, whatever you're planning on, addressing in 10 years. So not just what you can cover with your 521 funds, your whole plan. Yeah, thank you, Julie. Next one, will these funds be deposited into an investment pool account? We need to set up a new investment pool account number in order to track these funds and the earnings on the investment.
Next slide.
Decision of the board.
Yeah, and we'll cover that a little bit in a minute too. Okay. And then the comment on the use of interest earned on 521. Lenny, please expound.
No.
Oh, gotcha. Sorry about that. Okay, let's move to the next slide here. So we're getting closer to the end. Major capital improvements, this is again lump sum. So this is straight from the legislation. Here's what, in the legislation constitutes major capital improvements. We've talked a little bit about the useful life, the 7 years, and that's kind of standard guidance is 7 years for a capital project. Is that right, Wayne?
It's generally based upon how the Internal Revenue Service analyzes the distinction between capital improvements and maintenance or other more operating expense related items. So that is there as kind of a line to make the measurement of whether we're into a capital improvement or not that would satisfy the IRS standards.
Thank you. And then let's keep moving. So still with lump sum, I'll just read through these really quickly. All the funds shall be used for school facilities directly related to the school district's core educational mission, and that's one of the things you have to attest to in the checklist. No funds shall be used for facilities with a primary athletic purpose. I think we've talked to many of you about this. I think we talked about it on the post-legislative session tour a little bit too, that if you are building something that is primarily academic, but is also used for athletic, that is allowable. What's not allowable is are items with a primary athletic purpose. And then this third bullet, a quote from the legislation: use of funds shall include regular and routine facilities maintenance. This has been a big conversation piece, because in the legislation it says the modernization funds can be used for regular and routine maintenance. What we have learned, what we've been told, is the intent of what that means is big projects on existing buildings. You could have a new building, you have your existing buildings. What this means is maintenance on your existing buildings, but it still needs to be those larger projects with the 7-year life expectancy, going back to this major capital improvement list. So talking about renovating, remodeling, and some of these bigger updates. So that's what is meant by that part of the legislation. Let's talk about annual distributions, and then we can maybe circle back to some more questions if some pop up. So if you elect an annual distribution, we've talked about this a little bit already, but that follows the same priority order as the School District Facilities Fund, which is the House Bill 292, Idaho Code 33911, where you have to pay your existing debt first, which you can see in those first 3 bullets. And then the 4th bullet, any monies that remain can be used for these items that are listed. And that 3rd one is saved for future school facility needs. And so that's where you could have some more flexibility in your funding uses. And this next slide talks about that a little bit more. Regular and routine facilities maintenance, including preventive maintenance, building repairs, building security, and then those other items that are listed as well. So again, this is both uses for school district facilities funds and if you take an annual distribution of the modernization funds. And then for reporting, we talked earlier in the business managers webinar about maybe we could have fewer reports, but here we'll just replace the reports with a different one. So you don't have to do the square footage report anymore, but there will be some reporting requirements around these funds. We do want to have a separate accounting for the school modernization funds versus the school district facilities funds, and we'll work, I know Julie and her team are already working on that, and then there will be an annual report to the Department of Education, and we'll keep you posted on those details. That will not be, you won't have to submit that for a while. It'll probably be, you know, after the close of this next fiscal year probably, but we'll keep you posted on that timeline. And in that report, you'll be asked to report the dollars spent in the areas that are outlined in statute. And again, we'll put together some more information on that to send you. And then in the statute, it says that if you don't spend the funds on what they should be spent on, then they're supposed to be repaid. Okay, let's pause here for just a minute and answer any other questions, and then we'll go through these key dates. Okay. I think,
Replacing the roof on the gym.
so,
Can go up there with
okay, so gym roof replacement, yes, that's allowable.
Primarily,
If it has a primary academic purpose. Thank you, Wayne. Parking lots and playgrounds,
You know, this is Julie Overlay, that's gonna be a mind shift for a lot of us, because the school building maintenance dollars and that 2% requirement only included within the four walls of a building. But the school facilities, I'm asking Spencer and Gideon, would include sidewalks, parking lots, et cetera. A safety hazard is a safety hazard, so.
For sure, school safety is listed in there in the statute specifically, so a parking lot, right, that's a parking lot asphalt, that's a 7-year life, obviously, so in summary.
I think everybody's gonna have to recognize that there are the statutory limitations that our legislature placed on how these funds are used, and there are the tax-exempt financing restrictions, and we have to account for both of them. So let's take an example of paving a parking lot. If you have parking lots that are unpaved and you choose to pave it, that would be a capital improvement. If you have a parking lot that's already paved and you have to do some maintenance in the form of seal coating the pavement, that is routine maintenance. And these are gonna be lines that you're gonna have to evaluate, and I think we're working with the State Department, there's going to have to be some procedure to kind of develop more refined guidance on how this is done. And the best advice will be establish compliance with the guidance before you spend the money in order to be able to comply with both of those restrictions. Because we just can't predict everything you might do. And I know a lot of you are thinking about, well, what about all these things? Well, those are good questions, and they all need to be decided in a uniform way among the school districts, and so that's gonna take some centralized guidance on this.
When we start to feel, I mean, we, as discussed, we don't know the answers to all of it, but we're certainly getting there, but we obviously have some major guidance here. 7 years, right, as first initial one. If the primary area is athletic, it's a no-go. Now, the school facility funds are different, right? We're talking about modernization funds today, because they're the results of the bond proceeds. And there's a little bit of variation there, as we've talked about, regarding lump sum and annual distributions. We're very aware that most of us will be choosing the lump sum piece of it. So, great conversations. And one thing that's on our list here very soon is to issue more guidance related to how the State Department will be asking for accountability of spent funds. We're working on that. Great question.
Okay. Which one? Yeah, next. I mean, we take the lump sum and assuming our 10-year plan is submitted, accepted in the next few months, can we safely assume we will receive money in FY '25 to cover costs for allowable expenditures made this summer, fall, winter?
That's the assumption we're working on.
Right. Okay, and then another one, with major capital improvements such as remodeling locker rooms last longer than 7 years, from what has been said, is it not okay to use these funds to pay our own staff to cover that? Why is that the case? It would cost the district more to contract that out.
The answer is you can do it, and you can rely upon the earnings of the lump sum grant, investment earnings, to do that. But is the locker in the gym, and therefore primarily for athletics? That's a state law question, and if it is, it wouldn't be permitted, because you have to use the funds for core purposes, not athletic purposes. But this just demonstrates that we have to weave our way through the restrictions under state law as well as the federal law aspects that we have to manage from the lump sum.
And it's the federal law related to the tax-exempt bonds that restricts using those funds for staff salaries. Next one is choosing an annual distribution. Since it is a set amount, can we put it in the ballot language each year to show it will be reduced by that amount?
This is Julie, there's some specific language in here that Alan Dornfest was referring to. I think that's something we'll have to get back on. I need to find the specific language in my notes from Alan's conversation.
Perfect, thank you, Julie. Next one, making sure I understand, if we receive our House Bill 292 funds and they cover our bond and supplemental levy for FY '25, any remaining 292 funds and the funds from 521, if we receive an annual payment, could be put in the facilities fund, which could be used for routine maintenance. Let's see. We're trying to make sure we're following your order here.
What's that?
I think the answer is yes.
It is,
I think
yes.
so too, yeah. If you have your debt covered, paid, then yes, you could use could use both of those for.
And because they're receiving an annual distribution, the answer would be the opposite if you were receiving a lump sum.
Sorry.
Right.
Yeah. Okay, if it's annual. Yes. And be sure, as we move along on this too, remember 292 is now school facilities, and school modernization is school modernization. We often refer to House Bill 521 as school modernization. Early on, we were all confused with 521 because we all made the assumption it was talking about modernization, but it wasn't. It's the old 292, school facilities, and now what we know is the school modernization. So, yeah, confuse that to start with.
No, that's okay.
Necessarily.
Would you like to start us on the
Sure.
the key dates, Spencer?
Sure. So part of the statute requires the Department of Education to distribute best practices regarding maintenance. So, we have distributed, when I say we, Denise here in our office has done a great job to distribute well over 100 of those best practices manuals. If you haven't received your login yet, you need to reach out to us. We've missed your submission of your survey or something. Today, after the meeting, you'll get before the end of the day, you'll get an email from Gideon here that has a lot of the summary of the stuff we've talked about and other important links. But first in there is that survey that needs to be completed by next Monday. And that is the primary purpose of that survey is they'll help Eric and Wayne plan for the distributions of the funds. It's going to ask you what month you would intend to submit your plan, and also if it's going to be lump sum or annual or both. And so it would ask you to give that some thought, but give it to us. That's crucial information for us to being able to plan in the future. So June 13th at noon. So two parts to this. The maps software is, as a whole, is not quite ready to release. We're hoping to have that here rolled out in the next couple weeks, but we don't have an exact date yet. But we don't want to hold you up in any of your processes here. So what we're going to do is train you how to conduct the facility condition assessments. And with those 42 data entry points, Jacobs has a rubric that will guide you and help you in conducting all of those. And you'll take all of that, you'll conduct them, and then when that's done and we release the software, you can then enter that data into the software. But this allows you to get a jump start on it. But we also recognize that until the software is out, the whole process cannot be completed. But understand there's a lot you can do in between now and then of your 10-year plans, knowing that you still need the estimations, but also those facility condition assessments. They're not going to take a significant amount of time, but they will take a minute to do. So that's going to help you get going so you're one step closer to having your plans ready. And we will send out a calendar invite, but we also, in that email today, you'll also get an invitation today that has that as well. We've got a lot of great questions from the day that the governor signed this to today of what's our time frame. It really is contingent upon when plans are submitted to us. The sooner plans are submitted, the sooner we get our money, essentially. And this is kind of an exaggerated example, but if we received, $25 million in approved plans, we can't really go out and bond for that immediately, right? We've got to wait. And we recognize that we are expecting a lot up front, but the sooner we get plans approved, the sooner we'll be able to get funds. And with that being said, districts will only receive a portion of it to start with, but as Eric has mentioned, if everybody submits their applications within this fiscal year, we can get that money out to you at that time. And last, we've talked about this before, but the process has to be completed by June 30th, 2025.
Okay, let's see if there are any other questions that we haven't addressed. We have contracted our facility maintenance out to a third party. They have a licensed HVAC plumber and electrician. We pay monthly for the maintenance services they provide, both capital and non-capital projects, and we pay a service fee. Since we are not paying their salaries, I assume we can pay them for capital projects they complete, same as any other service provider.
If you're looking at lump sum funding, you cannot pay for their ordinary maintenance activity. You can only pay the cost of the capital improvement.
Thank you. Next one is our long-range facility plan that we had completed in April this year, sufficient for the facility's condition assessment.
If it has a 10-year plan by campus with major systems, the answer is yes. It's a great question. You don't have to use the template that the Department of Education developed as long as it has those 10-year plans of estimated expenditure of funds combined with major building systems. Great question.
And then the webinars, yes, are posted right now on the Department of Education website. The first one, the second one, the PowerPoints, the templates, all the documents that went with those webinars are all posted. You can watch those. This one will be posted as soon as possible, probably within the next week or so. And we'll keep posting information to that section. So on the department website, go to the school finance webpage. On the school finance webpage, scroll down to facilities, and everything's posted under that heading. Okay, I'm gonna wrap up, but if there are some other questions that pop up, we can address those. Thank you, Monty and Wayne and Eric and Julie and Spencer and Amber for keeping us on track. Thank you all for your help with this today, and thanks to everyone who was able to join. Thank you for your patience as we sort through these details. We will keep you posted as we learn more. And our next webinar is the one that Spencer described. That'll be June 13th at noon. That will be the statewide facility condition assessment training, and as was mentioned, we will send you a link to that. That'll be at 12 p.m. Mountain Time, Thursday, June 13th. And yes, please, go ahead.
So on that note, that June 13th training is primarily for those that are conducting the actual FCAs. And if superintendents want to attend, you're more than welcome to. But it really is for those that are going to be walking around and conducting those. So we will send that link out, though, to superintendents. We'll also send it to those email addresses that were entered to receive the best practices and maintenance manual. So if their names aren't one of those lists, it's your responsibility as a superintendent to make sure that those individuals have those, that training, link. But like everything else, it'll be recorded and be able to be accessed asynchronously as well.
I did forget one more slide, sorry. In the PowerPoint that we send out is the contact information for everybody if you have questions as well. Okay, thanks everyone for joining. We'll talk to you soon.